Good morning once again. Welcome to the session. This session will continue the MCQ practice. So we'll go to the slide. Few questions we have done already. We have a lot of questions. After 100 questions also, I think we can continue one more, little more question we can add. So last session we discussed already this question. The journal entry for purchase of goods from Ahmed on account will be. So that we discussed already. Journal entry for purchase of goods from Ahmed on account. On account means on credit. Whenever you buy goods from a supplier on account, account payable will be credited. As it is purchase account will be debited. So purchase debit and account debit purchase and credit account payable. B is the correct answer. We discussed already. Now we'll go to the next. ABC has a service revenue 20,000, salaries 2,500, wages 1,500, and rent 1,000, interest revenue 1,200. The net profit and loss will be, or loss will be. So it's a very direct question. Profit, if the revenue and expenses are given already, profit to find, revenue minus expenses. Total revenue minus expense. There is no gross profit. If gross profit is there, you know already. Revenue minus CGOS, cost COG, cost of goods sold. Revenue minus cost of goods sold is equal to gross profit. Then gross profit minus other expenses, you will get net profit. Here it is only revenues and expenses are given. So revenue, total revenue minus total expense. So here service revenue is the 20,000, direct revenue, service revenue. And another indirect revenues, the interest revenue or interest received or interest income, 1,200. So total revenue is 21,200, and expense salary is 2,500, and 1,500 is wages and rent is 1,000. So 2,500 plus 1,500 is equal to 4,000 plus 1,000 is equal to 5,000. So 21,200 minus 5,000. 21,200 is your total revenue and your total expense is 5,000. So 16,200. Then there is two options, whether net profit or net loss. If the revenue is more and your expense is less, it is net profit. It is the revenue is 21,200 and profit only 500. So revenue exceeds the profit. So it is net profit 16,200. So it's a very direct question. You can any question like this, if total revenue and total expenses like this 3 or 4 5 expense, commission may be the transport, electricity, advertising, insurance, any expenses given, you add all the expenses, you deduct from total revenue. Total revenue is equal to direct revenue plus other revenue. Other revenue, you know already 5 other revenues or other income. Rent received, commission received, interest received, discount received, and dividend received, or any other profit on sale of asset or anything like that. Any all this revenue is called so direct revenue, you know already, income from revenue, service revenue, and sales revenue. This is direct. So service revenue, sales revenue plus all the indirect revenue or income is equal to total revenue minus all the expenses. If you want only net profit and revenue or all the revenue items and all the expense are given, it is very easy. So we'll go to the next. On 1st October 18, National Trading Company LLC has a stock of supplies 2,500 and supplies purchase supplies purchased for the year are 1,500, and 31st December the supplies were 500. The supply expense we have when adjusting entry. I told you in adjusting entry, it's very important to understand all the 5 adjusting entries. So adjusting entry we have studied last. Supply expense. Supply expense is equal to opening stock of supplies plus purchase of supplies minus closing stock of supplies. All 3 are given here. Opening supplies on 1st October, 2,500 supplies were there, and purchase of supply 1,500. So 2,500 plus 1,500, 4,000 minus 500. 4,000 minus 500, closing supply. Opening stock of supplies, add purchase of supplies minus closing stock of supplies. So you'll get the supply expense. How much supplies are to be debited for the year as expense. So 2,500 plus 1,500, 4,000 minus 500 is equal to 3,500. The first option, option A, is the correct answer. 3,500. It means 4,000 minus 500. So this is also a most oftenly asked question. Calculate supplies. Sometimes you may calculate closing supplies. Sometimes you may have to calculate opening supplies. This equation same. You can add or minus, you will get. But the equation you remember, opening stock of supplies plus purchase of supplies minus closing stock of supplies is equal to supplies expense. Then next question, bank allowed company to continue with the money even the account has no funds. Sometimes bank gives you, permit you to withdraw money in excess of your deposit. If it is it is a permission or it is an allowance granted by the bank, permission granted by the bank for the current account holders on the basis of their past experience to withdraw money in excess of their deposit. The name is account payable, account receivable, bank overdraft, bank overdue. The correct answer is bank overdraft. Sahab ala makshuf. That means you withdraw the money in excess of your deposit. Bank overdue is not saying. Overdue means you are takhir. You have to pay something. You may delay it. Bank delay. That is different. And account receivable, you know already. The person, the amount due from debtors to the company. Account payable means the amount you owe to the creditors, suppliers. So account payable is a liability, and account receivable or sundry debtors. Account payable can also be called sundry creditors. Account receivable can also be called sundry debtors. Sundry debtors plus, actually it is sundry debtors plus bills receivable. Account payable is sundry debtors plus bills payable. Bank overdraft is excess of money withdrawn, excess of money over your excess of withdrawals over your deposit. For example, you have deposited 5,000 real in Bank Muscat. Now, one customer you have to give, you gave 6,000 real or more than 5,000. It may be 10,000 real check you give. Normally, in normal case, if there is no overdraft facility, it is a facility. So if there is no overdraft facility, the customer goes to the bank with the 10,000 check amounting to 10,000, but your account, bank check, your account shows only balance 5,000. The check will be bounced or returned. Check returned, dishonored. The check will be returned. Normally it is called check returned. But for return of check, bank will charge you some money also, fine also. But if you have a good relation with the bank, and bank gives you, bank grant you overdraft facility, the permission to withdraw money in excess of your deposit. In that case, if the check is gone, 10,000 check goes to the bank, but bank checks your account having already 5,000, bank will honor the check. Bank will pay the money 10,000, but within normally it is 30 to 60 days. 30, some banks are 45 days, or some banks are 60 days. Within 2 months, maximum within 2 months, you have to repay the money to the bank. If it is not paid, there will be fine. So this facility is called bank overdraft. Sahab makshuf, sahab ala makshuf. So this is the correct answer. Bank allow the company to withdraw the money in excess, even the account has no fund. It is called bank overdraft. Bank overdraft is a current liability, that also you have to understand. Then the debit increase in which of the following account? Among the following, which account make an increase in debit? It is very clear, very direct question. Assets and expenses, you know the rules. Asset and expenses, asset and expenses in the modern rule, asset and expenses, when debit it will increase, or for an increase you have to debit. Liability, equity and revenue, whether it is liability and equity, revenue and equity and liability and revenue, all these cases, what happens, all will be a credit aspect. Liability, equity and revenue also, these three are, when increase, it will be credited, credit increase. So this is only the option, asset and expenses. This all, you can find most of the questions are directly related to the rules, mostly the modern approach. Sometimes it may be nominal, real, then nominal, real and personal account, the traditional approach also. Which among the following transaction will increase the liability and asset? This also rule. Increase in liability, borrowed loan from bank, purchase furniture for cash, withdrew cash for personal use, sold goods on credit. Which among these make an increase of liability? All the four transactions you have to check the effect. You borrow loan from bank. So what happened? Your asset is increasing, cash is increasing, and bank loan, qard, it is your liability. Liability is also increasing. So it's an answer. Asset and liability is increasing, right? Which among the following increase asset and liability? That is the answer. Then, but you have to check all. It may be different order, it may come. So purchase furniture for cash. You purchase furniture, one asset increases, for cash another asset decreases. So one asset increase, another asset decrease. The option will be purchase furniture for cash. Withdrew cash for personal use. You withdrew money from bank, or from office, but your personal use. So what happened? Asset or cash decreases, and as it is for personal use, your equity also decreases. So cash, asset and equity decreases. So that is the effect. Then sold goods on credit. If the goods are sold on credit, what happened? Goods is going out, one asset decreases, and your debtors or bills receivable or account receivable, another asset is a current asset, another asset increases. So one asset, goods are going out, so one asset decreases and another asset increases. Or another way you can tell, your revenue increases and your asset also increases. Sales is your revenue and your asset is also increasing because your account receivable is an asset. Anyway, you can write, but the effect will be same. So this is the question. Now we'll go to the next one. According to which concept stock in trade is valued at cost price or market price, whichever is less? You know already. There is four concepts: disclosure, full disclosure, conservatism or prudence, consistency and going concern. Among these, which is applicable in when stock is valued at cost or market price, whichever is less. So this is very clear. This concept is applicable to conservatism or prudence. We have discussed already. When anticipated profit is ignored and anticipated losses are to be accounted. So in future, there may be anticipated losses you have to take into consider, but not anticipated profit. So whenever your stock is valued, if the market price is less, you have to consider that. For example, your stock market price is 20,000, but the cost of the stock, present cost of the stock, your actual cost is 25,000. So when you are closing stock valuation at the time, you have to consider that market price, then whichever is less, because you are anticipating or expecting a loss, a decrease. Decrease of stock means it is a loss. So you are expecting a loss, it is to be considered. But if it is just against, and market price is 25,000, if you buy this same stock, you have to pay 25,000, but your cost is 20,000. So in that case, anticipated profit or increase in stock will be there. You ignore that. That in that case, 20,000 will be considered. So this is another concept, conservatism. Then consistency, you know already, uniformity. Same method or procedure you have to apply. Going concern means business will continue for a foreseeable future. It is not going to stop in nearest future. Disclosure, full disclosure means you have to disclose all material facts. That these all principles we discussed already. But the question will come like this, you have to understand. Now the next question is ABC LLC paid R1,000 cash for loan borrowed last month. This transaction would repayment of loan. When you repay the loan, before you take loan, now you are repaying the loan. How it will affect? So all the option will check. Decrease in asset, decrease in liability. Your asset is decreasing, it is correct. Cash is going down, cash is decreasing. And liability, loan is a liability. Further, it is a liability, liability will decrease. So first option is the best option. Then second also we can check. Increase an asset, because first is decrease in asset, decrease in liability. Your asset is decreasing because cash is going out, and you're paying the loan, repayment of loan is a liability, liability will also be decreased. So decrease in asset, decrease in liability is the correct answer. Then another option will check increase in asset and decrease in liability. Increase in asset, that is ruled out because there is no increase in asset. Your cash is going out. The two accounts related is cash and bank loan. So when cash is going out, cash never increase, asset will never increase. So B and C are ruled out. Then decrease in liability and increase in equity. Equity will never increase. Equity will increase to option you know already. One is investment, additional investment or capital you bring to the business. Another is revenue or profit. Your earnings or revenue will make an increase in equity, and your withdrawals or expenses will make a decrease in equity. That also you have to understand. But this is the first answer. The correct answer is the option A. Now find out the value of account receivable from the following information: cash 10,000, account payable 5,000, and car 5,000, owner's equity 15,000. You have to calculate the account receivable or sundry debtors. It's an asset. In this question, you can apply directly the rules of accounting. Which rule? Accounting equation. That means asset is equal to liabilities plus equity. So here you can see one account receivable, one asset is not given, but another two assets are already given. Cash is given, car is given, and account receivable. These are the three assets in this question. And account payable is a liability, equity. So liability plus equity is equal to asset. Your total asset should be equal to your liabilities plus equity. So liabilities, only one liability is the 5,000, equity is 15,000. So liability plus equity is equal to 15 plus 5, 20,000. So your total asset should be 20,000. So according to the accounting equation, asset is equal to liabilities plus equity. So your total asset is equal to, it should be 20,000 as your liabilities plus equity is 20,000. So your car and cash, this including this 10 plus 5, 15,000. Now there is a shortage of 5,000 in assets, that is account receivable. As no any other assets are mentioned, the difference is account receivable. So in this question, account receivable is R of 5,000. Option A is correct. This is also up to an extent it is a LOT type of question, normal, because even though you have to apply the equation should be correct. Asset is equal to liabilities plus equity. Then you have to understand from the question which are the assets, which are the liabilities. Two assets, cash and car, and one liability, one equity. So equity plus liability is equal to 20,000, and cash and car is equal to 15,000. So the debtors or sundry debtors or account receivable will be 5,000. Now next is, if total asset of the firm is 100,000, outside liabilities are 40,000. This is a very direct question. Capital contributed by the owner. This is also accounting equation. Equity you have to calculate. Equity and capital both the same. So asset 100,000, liabilities 40,000. So equation is asset is equal to liabilities plus equity, and equity or capital is equal to asset minus liabilities. So 100,000 minus 40,000 is equal to 60,000. Last D is the correct answer. There is no other option. You need not think. It is a direct question from the equation, connected with the equation. Shareholders on which type of business? Shareholders on which type of business? You know already, it is very clear. Proprietorship, corporation, partnership, cooperative. Out of this, corporation is the in corporation the owners are called shareholders. Shareholders are owners in cooperation companies. Company you know already, LLC, SAOG, SAOC. These companies in these cases, shareholders will be the owners. Otherwise, cooperatives also, we are not studying cooperative in detail, but cooperative also shareholders are the owners. Normally, it is cooperatives are the state-owned enterprises. Shareholders will be there, but they are not the full owners. Their nominal value of the value of the share will be very less, or the value of share will be less. The cooperative societies are mainly financed or owned by a government. It is a government support. So anyhow, the best example, proprietorship you know already, the business owned, managed and controlled by a single person. Partnership 2 or 3 up to 20, in banking cases 10. You know already that is different. But shareholders owned is corporations or companies. Now next is Al-Safa. Al-Safa LLC had supplies 2000 on 1st January. This also supplies January. The supplies on hand on 31st December, closing supplies are 3,000. Total supplies purchased 5,000. How much the supplies expense for the year? Supplies. This similar type of question came, but different figures. So opening stock supply expense is equal to opening stock of supplies plus purchase of supplies minus stock of supplies or closing stock of supplies. So opening stock 2,000 and 31st December 3,000. So opening stock once again 2,000 and supplies on January. The supplies on hand were 3,000 and total supplies purchased 5,000. So you can find opening stock plus purchase 2,000 plus 5,000, 7,000 minus 3,000 is equal to 4,000. So the answer is B. 4,000 is the correct answer. Once again, opening stock of supply 2,000 on 1st January, it is opening stock, and purchase of supply is 5,000. So 2 plus 2000 plus 5000 is equal to 7000 minus closing stock of supply, it is 3000. So 7 minus 3 is equal to 4. 4000 is the correct answer, B. Then supplier and bankers who have claim over for on against the business are called claim for money against the business. So suppliers, you know already, suppliers are having suppliers and banks are customers, investors, debtors, creditors. They have the supplier, you have to pay money. You have to pay money means they have claim on your asset, and they claim on your claim for money on your asset. And banks, you took loan. When you took loan, not deposited money in bank. When you took loan from bank, they have claim on your assets. So they are called creditors. Creditors is the person to whom business owes. You owes to them. They have claim on you means you owes to them. So it is your liability, that is creditors. The customers, investors, debtors, all same meaning. It is all your account receivable or your current assets. Creditors are your liability, current liability. Then which among the following is correct for owners? Which among the following is the correct for owner's equity? Owner's equity, which one is the correct? You know already. Capital plus retained earning plus net profit minus withdrawal minus dividend, first option. Then second is capital plus retained earnings minus net profit minus withdrawals plus dividend. Capital stock plus minus retained earnings plus net profit minus withdrawals minus dividend. Capital plus retained earning minus net profit minus withdrawals minus dividend. This actually will be little minus plus will make you confused, but it is very easy. That means your it is related to this, also related to accounting equation, equity, owner's equity. We discussed already. When you invest money, capital will increase. When your earnings increase, profit increase. When you withdraw money, it will decrease, or dividend or any payment. If you make any payment or expense, it will decrease. So your equity means capital stock plus retained earning plus net profit minus withdrawals minus dividend. Dividend means payment. Withdrawal means net profit and earnings. These are just like your income, profit, and capital means your investment. So first option itself, it is the correct one. All other options are some way it is wrong. So first option, capital or equity is equal to owner's equity is equal to capital stock plus retained earning. We discussed already. The portion of the profit you retained in the business, reinvested in the business, it is called retained earnings. So capital stock plus retained earning plus net profit minus withdrawal minus dividend. Withdrawals and payments or expenses reduce your equity. So this is the first option. A is the correct answer. Then an investor uses the financial statement for, as an investor, who want to invest in your business will use financial statement. He will use your financial statement, balance sheet or income statement, balance sheet and statement of equity and fund flow, cash flow, or statement, audit report. All this an investor uses for what? Verify whether the company complies the tax law. Tax laws, whether the company complies tax laws. Company is going in compliance to the laws. Tax laws are following or not. That is government duty, or the tax authorities, or legal authorities, Then making decision to buy or sell share. Then day-to-day decision making related to business. Know whether the company can pay increased wages. So second option is the correct option. Making the decision to buy or sell shares. An investor An investor or prospective or potential investor always want to decide whether to buy the shares or invest money in the company or not, or among many alternatives, opportunities, in which company is to be invested. That is his decision. He want to make decision whether to buy or sell shares. Some companies he sells the shares, some company he buy the shares according to his analysis, his interpretation on the basis of analysis of financial statement. So that is the correct answer. Making decision to buy or sell the shares, whether you want to sell. Suppose the profit of the company is going down, the market value of share is decreasing or starting to decrease, so it is better to sell it, right? Suppose his market value of the share is gradually it is increasing. There is an upward trend increasing. So the best decision will be to buy that shares of the company, because he expects an increase in future. There is a stock market. There are already speculative transaction, bulls and bears. It is called the person who expect an increase in share is called bulls, dealers, bulls, and bear is the person or the dealers who expect a decrease in value of share and sell it. Or if it is already gone down, it is in the bottom now, but he expects an increase, so he will buy the share, because he will get the shares at a least price and he can sell it at a higher price in future. So this is decision making. The shareholders or the dealers or shareholders or investors want to decide whether to buy or sell. Then day-to-day decision related to business is taken by management. They know whether the company can pay increased wages, its labor or employees. Employees wants to analyze the financial statement, or employees representing the body, professional body, or any other association representing the employees. They want to analyze whether they want to increase the wages for employees according to the financial position or profitability. They can do that. So these are the things. So just the correct answer is making decision, because investor make decision about. First one is tax laws, that is government or tax authorities or legal authorities. So this is or regulatory agents, legal authorities, or it is called regulatory agencies also wants to check whether the company is going in compliance with the rules and regulation or tax laws. Then withdrawal by proprietor. Good. If I am the proprietor of the business, if I take money for personal use from the business, it will reduce both the asset and equity. This question is a repeated question anyhow. The reduce asset and liabilities, reduce owner's equity and increase liability, reduce liability and increase owner's equity. The only option is reduce both the asset and owner's equity, because cash is going out of the business. So asset of the cash reduces and owner's equity, his capital or his what you call Rasulman is just decreasing because he took money from the business. So withdrawals always reduce equity. Withdrawals and payments, dividend or any other payment, will reduce equity. We'll discuss before. So first answer A is the correct answer. Then according to equation, accounting equation may be expressed. This is everybody know this. Asset is equal to liabilities plus equity. The other all three are not incorrect. Asset plus equity, asset plus liability is equal to equity, and asset is equal to liabilities minus equity. Asset plus equity is equal to liabilities. But the first one is the correct answer. In which of the following case do you credit? Which account is to be credited? Credit cash. Cash will be credited when cash goes out or decrease. So you can check which transaction make a decrease in cash. Received cash, no. Paid salary for the month, cash will be credited. When you pay salary for the month or any payment, cash will be going down. So B is the correct answer. received electricity bill for the month. Just by receiving the bill, cash is not decreasing. When you make payment only, cash is decreasing. Provide service on credit. You provided service on credit. Service you have done, your income will increase. As it is on credit, your asset, that means account receivable, will increase. It will never make a decrease. What do you call? Cash is not credited. Cash is credited only when cash decreases. All other cases, cash is not decreasing. So, paid salary for the month. B is the correct answer. Then the journal entry for purchase of office stationery from Moosa on account. If you buy office stationery on account, you know already, anything you buy on account, account payable will be credited, and it is office stationery, it is not goods. If it is goods, purchase will be debited. As it is office stationery, stationery or office stationery will be debited. Office stationery can be, it depends upon the company's decision whether it is to be treated as an asset or it is an expense. If stationery you buy, or just like supplies you buy for stocking, it will be asset account is to be debited. So office stationery, whatever, whether it is considered asset, or if this stationery is used, is to be consumed, or for entire stationery is for the consumption of 1 year, then you can debit the stationery and credit cash. If it is, but in this case credit purchase, so account payable you can credit. But if stationery anyhow, a debit stationery and account credit account payable. B is the correct answer. Debit office stationery and credit cash. That you can write if the cash is paid, but it's on credit. Debit cash and credit account payable, that is not correct. Cash is debited when cash you are getting, and debit account receivable and credit, you sold office stationery, debit account receivable will be when you sell office stationery. So this is option B is the correct. Debit office stationery and credit account payable. Account payable credited because it is your cash is not received. Office stationery, it is an expense or it is an asset. Whether it is both case, you have to debit. Now, which among the following is a liability? Mas'uliyah. Service revenue is an income, revenue. Unearned revenue, prepaid expense, account receivable. Prepaid expense is a current asset, expense paid in advance, muqaddam. And account receivable, it is, that means your account receivable, the mudin. So it is your debtors or account receivable is an asset. So service revenue is a revenue, prepaid expense is an asset, account receivable is an asset. Only unearned revenue, income received in advance, revenue received in advance, that is only you have to, revenue received in advance. Yesterday we discussed already, dakhal ghayr muktasab, right? Dakhal mustalim muqaddam, that means you received in advance, that is a liability. So unearned revenue is the correct answer. Then an account having a debit balance in general ledger will classify it as, it's a very clear, it is an expense. Expense always shows a debit balance in general account or anywhere, in trial balance or in everywhere. Expense shows ledger account or a trial balance, everywhere expense shows a debit balance. Capital shows credit, liability shows credit, revenue also shows credit. So only expense and asset shows debit. That is why expense and asset having different rule. Debit increase, credit decrease. Liability, equity and revenue means credit increase and debit means decrease. So these three will show credit. Then the journal entry for purchase of machinery from Ahmed on account will be, if you buy machine from Ahmed on account, on credit, that means money is not paid. If you buy machine from Ahmed and money is not paid, what is the option? Can you check? Debit account receivable and credit machinery, and debit machinery and credit account payable, Debit machinery, credit cash, debit cash, credit account payable. One thing is very clear, office machinery. First you have to understand purchase of machine. It is not purchase of goods. If purchase of goods, purchase will be debit. And whenever you buy something from any supplier, account payable will be credit. So machine, when you buy machine, machine will be debit and account payable will be credit. So B is the correct option. Debit machine and credit account payable. Debit account receivable and credit machine is not an option. When it is machine is sold only, it will come debit account receivable and credit machine. When machine going out, then if it is machine, not goods, if it is goods, sales will be credited. Then debit machine and cash will be returned if you buy machine and pay cash. That's all. And debit cash and credit account payable will be when debit cash is receiving. You are receiving cash from one account payable. Actually you are paying account receivable. It's actually third one, the last one. D is it is a wrong entry. So first you have to understand machine, debit and credit account payable. Account payable you credit because money has not paid, and machine comes to the business or machine asset increases, debit. So B is the correct answer. A, C and D are not the correct options. The next one is a building was purchased for 40,000 by making a payment, making cash payment of 16,000 and the account payable is 24,000. What would be the effect on the total assets and total liabilities of the business? This also directly connected with accounting equation. Asset is equal to liabilities plus capital, equity or capital. Now we'll check purchase 40,000. You purchase 40,000 assets. Purchase building is an asset. You have to understand what would be the effect on total asset. Total asset, how it will affect. So 40,000 you buy one asset, that is building, and another asset is going out, that is cash, 16,000 you paid. So net difference of asset, net increase of asset is 24,000. How it is? 40,000, one asset is coming in building and another asset cash is going out 16,000. So 40 minus 16, 24,000 net increase in assets. And the account payable, your liability also 24,000. Why? Out of 40,000 is to be total asset comes, 16,000 you paid already, so 24,000 is the amount due but not paid. It is your account payable or liability. So net impact is 24,000 asset increases and 24,000 liability increases. That's all. Net impact. If it's separately you are taking 14,000 building increases, cash is decreasing 16,000 and your account payable is increasing or liability is increasing 24,000. But if you check the net effect, 40,000 minus 16, 24,000 your asset increases and 24,000 your liability increases. So you can check the now option. Asset increased by 40 and liabilities increased by 16, wrong. Asset increased 40, liabilities increased by 24, is wrong. Asset increased 16 and liabilities increased by 16, is wrong. Asset increased by 24 and liabilities increased by 24,000. So answer is option D. Last one is correct. Actually, this type of question, it is easy. If you understand, if you think and do, it is easy. But if you by heart this one, it will make mistake. It will confuse you. Whenever there are some difference in figures, it will make confuse you. But the best way is total asset 40 building and decrease in asset 16. So net asset increase 24. Then 24,000 is to be paid. It is your account payable liability. So last one asset increased. Net asset or asset increased 24, liability increased by 24. Asad purchased machine for 5,000 in cash. It's a very direct entry. Asad is purchasing machine for 5,000 in cash. So increase in one asset, increase in other asset, increase in asset and increase in equity, decrease in asset and decrease in liability, increase in asset and increase in liability. Machinery purchased and paid cash. One asset is increasing, another asset is decreasing. The first option is the correct one. Increase in one asset and decrease in another asset. Increase in one asset, that is machinery, and decrease in another asset, that is cash is decreasing. Now Mr. Zahran purchased furniture. Mr. Zahran purchased furniture for his computer business. His computer business on credit for 2,000. Zahran purchased furniture for his computer business. He's a computer businessman. He buy a furniture on credit for 20,000. On credit for 20,000. You know already, whenever you buy anything on credit, account payable will be credit. Then another here is a little small confusion. Whether computer is he buying, whether he is buying furniture. He is buying furniture for computer. So furniture is coming in, not computer. Computer business is a computer businessman, but he is now buying furniture. For computer means for keeping computer. So furniture coming to the business and account payable is credited. So debit furniture, credit cash is wrong, computer and cash is wrong, computer and account. So it is also wrong. Furniture and account payable. Last one D. Furniture, debit and credit account payable. Furniture coming to the business and account payable is liability, or your creditors account, your suppliers account will be credited. That is account payable. So last option is the correct option in this case. Then a company paid insurance for the whole year in the beginning of the year. This is a, you know already, if the company is paid insurance for the whole year, it is prepayment, prepaid expense. Naftat muqaddam, or prepaid expense, unearned revenue, accrued expense. Accrued expense is income due but not expense due but not paid, outstanding. You have to pay but you didn't make payment. That is called outstanding expense. That is yesterday we discussed already. Nafqat al-mustahaq. That means you have to pay. That is accrued. Here prepaid muqaddam, you are paying in advance because a company paid insurance for the whole year in the beginning. So it is prepaid insurance. Not it's both revenue is not applicable at all, because unearned revenue means revenue received in advance, and accrued revenue means revenue due but not received. That is both not applicable at all. So among these, A is the correct one. When a company has not recorded the revenues at the end of the accounting period and records such revenue, the journal entry past is. Revenues are not recorded. Your company revenues are not recorded. Journal entry. So it's also direct question. Whenever you receive revenue, it is not recorded. Now you want to record. So revenue will be credit and cash will be debit coming in. So debit account receivable and credit service revenue. If revenue earned but revenue or service is done on credit, debit account receivable and service revenue is correct. But it is already your revenue received. So cash should be debit and service revenue will be credit. Debit service revenue is not correct. Debit service revenue will never come debit, because it is revenue always come credit. Then debit cash and service credit service revenue. Last option is correct. Debit cash and credit service revenue, because cash is coming in and your service revenue is recognized You are going to account revenue for this year. So revenue account is to be credited and cash account is to be debited as cash is increasing. This portion of shareholders' equity, this is the portion of shareholders' equity earned by the company but not distributed to owners but reinvested. This is also same as before, but the paraphrasing is different. The revenue which is earned by the company but not distributed. You make the profit, not distributed. So it is called retained earning. Dividend is the portion of profit which is distributed. Retained earning is the portion of profit which is reinvested. That means not distributed. So the term used is not distributed, not drawings. Drawings is different, capital is different. So the correct answer is retained earnings. Which of the following is a current liability? So here, cash, drawings, account payable, none of the above. So account payable only is the current liability. You know already, account payable is a current liability. Cash is an asset, current asset. Drawings is treated as a decrease in equity, or it can be treated as an expense payment. Just like in tally and all, drawing is considered as just like an expense or payment. In payment voucher, it is made. So here, account payable is the correct answer. Adjusting entry to record unpaid salaries. Unpaid salary, salary due but not paid. That means accrued salary or outstanding salary. You know already, whenever any expense becomes due but not paid, debit expense, credit expense payable. Or if it is salary, debit salary, credit salary payable. So salary payable debit it is and credit salary expense wrong. Debit salary expense and credit salary payable, and salary payable debit and cash credit, and debit expense and credit cash. B is the correct answer. Debit salary expense or salary and credit salary payable, or account payable, or mostly written salary or respective account payable. That means salary payable. So debit salary and credit salary payable. That is the correct option. Now, which branch of accounting is used by all stakeholders? Stakeholders means internal and external users of accounting. As a whole, it is called stakeholders. Only one branch of accounting is used by all stakeholders. Financial accounting. Cost accounting is used by management or cost account department, like that. Taxation by the tax authorities and legal regulatory agencies or government. And financial management accounting is used mainly by management and owners. Then financial accounting is used by all stakeholders. So all stakeholders used by financial accounting. Answer is C. The next one, the owner invested 40,000 in business. It's also a direct entry. Whenever any owner, whether it is Ahmed or Khalid or Fatma or any owner invests money in business, debit cash, credit capital. So last option is the correct option. Other all wrong options. Debit cash and credit capital. Wages and salaries are an example of asset, liabilities, expense, income. This is also very low order thinking, LOT. Wages, salaries, rent, commission, electricity, insurance, advertising, transport, and all this type of carriage, packing, every expense, every amount spent by the business for the day-to-day operation is called expense. So expense, salary and wages, not only salary and wages, all other expenses. So expense, it is an expense. C. Ahmed paid 500 for the month of insurance. This also almost similar question it is gave. This transaction would, Ahmed paid 500 for insurance. So it make increase in expense and or increase in expense, that option is not there. So decrease in equity and decrease in asset or cash is going out. So option increase in asset and decrease in asset, it is wrong. Decrease in asset and increase in equity, it is wrong. Increase in asset and increase in liability, it is also wrong. Decrease in asset and decrease in equity. When payment is made, any payment, not only insurance, salary, rent, wages, commission, discount, or anything you pay money, your asset is decreasing because cash is going up. And when an expense is met, any expenses payment is made, your equity also decreases. So decrease in asset and decrease in equity. Option D is the correct answer. Accrued revenues. Accrued revenue means revenue earned but not received. Revenue earned and received. Revenue not earned but recorded. Revenue received but not earned. Accrued revenue. You know already. Unearned revenue and accrued revenue. Unearned revenue means revenue received but not earned. Accrued revenue means revenue earned but not received. So revenue earned but not received. First option is the correct one. Revenue earned but not received. A. And which of the following included in firm's financial statement? Financial statement which is not included. You know already in financial statement, as per the International Accounting Standard 1, income statement is there, balance sheet is there. Fund flow statement is not included, but cash flow is there. Statement of retained earning, statement of owner's equity or retained earning, changes in equity is there. So among this, fund flow is not there. In place of, if it is cash flow, it is included. So 5 financial statement which are included are 5 statement which are included in financial statement according to International Accounting Standard are income statement and statement of financial position or balance sheet, cash flow statement, statement of changes in equity or retained earning, and the notes, required notes. So these 5 are required. The other you can include for fund flow statement. There may be bank reconciliation, and there may be many other statement may be there, but it is not a part of what you call, according to International Accounting Standard, it is not a part. It is not a legally required document. So fund flow is, you have to understand, it is not included. Equity is affected by investment, loan, purchase of supplies, receivables collected. Equity is invested by, loan is not affect equity, purchase of supplies no, receivable collect, investment. Equity actually affected by 4. Once again we'll tell, we'll discuss investment or capital, then revenue or profit, and this is increasing, and decreasing is drawings or withdrawals or drawings, and also losses or expense and losses. So these are the affected equity, loan, purchase, receivables, no. So A is the correct answer. Then journal is also called book of original, secondary, final, real. Journal is the book of original entry. It's also a direct type of question. Journal is also called original book of entry or first entry. If there is a first book of entry, it is also journal. Receipt of cash from a debtor. A debtor give you money, cash. How it affects? Increase in your asset, correct. Decrease in other asset. First one is the option. Debtor is already your asset, account receivable. So he give money, so account receivable will decrease one asset and cash another asset increase. So increase one asset and decrease in another asset is correct. Then decrease in an asset and decrease in owner's equity. No. Decrease in asset and decrease in liability, increase in asset and increase in liability. Only first option is the correct answer. So other option also you can check. You can check what effect is having and which is the similar, which is the most relevant transaction of this effect. Like that you can check. Which of the following users groups required most detailed information? Which among, there are four uses: lenders. Lender means lender, borrower and lender. Borrower means if I take loan from bank, I am borrower and bank is lender, the person who gives money. So lenders, investors, government agencies, management. Among these four stakeholders, users, which user is need most detailed information? You know already, management. Management need various type of analysis, so they need the detailed financial statement. Not lender. Lender, for example, bank, creditors, investors, government agencies are not that much details. They need the financial statement, but more detailed statement. All type of statement, whether it is cost accounting, a statement related to cost accounting, financial accounting, management, taxation, all these statements are required by management for their various analysis. So which of the following statement completely and correctly describe accounting? One among these four statement, following the statement means this line, which include the complete and correct accounting described it correctly, recording, classifying, summarizing economic activities in a systematic way, recording, classifying, summarizing all activities in useful manner. Accounting is a systematic process of recording social activities only, recording, classifying, summarizing economic activities in informal manner. So all almost same, but first one is the more meaningful, more complete or comprehensive meaning. Recording, classifying, summarizing economic activities, all the activities relating to money in a systematic way. In a systematic way, it is not 100% complete definition, but more among the four options, which is the complete meaningful statement is the first one: recording, classifying, summarizing economic activities in systematic way. So we'll stop here. External reporting is the result of financial accounting, management accounting, cost accounting, taxation. Which result is you use for external reporting? Financial accounting, management, cost, taxation. It's very clear. Financial accounting is income statement, balance sheet. Like financial statement we use for external purpose. Cost accounting internal, management, taxation only for tax authorities and for internal. So not for external, for all. Then we'll stop with this. One more. Internal uses of accounting information include all the following except. Which among the following is not an internal? Internal uses of accounting include which among the following is include all of the following except one of this is external, all others are internal. Which is the one? It is not an internal user. Stores manager, you know already, it is internal. Amur Mustaq or Amin Mustaq. Then creditor, chief executive officer, chief financial officer. So the second one, creditor is external, not internal. Creditor means the person to whom the business owes, or it is called supplier or account payable, from whom you buy goods on credit and you have to pay money. It is your external user of accounting. And last one, transactions are initially recorded in the books of final entry, account equation, T account, original entry we discussed already. So we stop here now today's session, and we'll continue the session. One more session we will discuss maybe little more questions. 100 questions already there, maybe 110 or 20. We'll discuss next class also. We'll continue this type of questions. So your knowledge, it will improve, and it will help you when you get a multiple choice question. If you go through all this question 2-3 times, you will get easily you can understand, because if 125 question or 20 question, 120 question we discussed, then whenever you see one question, it will be anyhow related with these questions. It is not similar, it may not be similar, same, but it will be somehow related. So you get it very fast. You can write the you'll get the correct answers, because one way it is good for you. You have 70% MCQ questions. That pattern of question is good for you. No, not for you. In all LCCA pattern mapped questions, all these questions pattern is good, because if you have knowledge of questions like this, if you practice more and more questions, then no need to by heart, nothing to by heart, or you need not by heart the any what you call definitions like that. You can understand it easily, you can find the correct answer. Okay, anyhow, we'll continue. Thank you, thanks a lot.